Investors now believe there is a 1 in 3 chance of a rate rise in August after inflation accelerated to 4% for the month yesterday. Joining us live now is the independent analyst Evan Lucas. Always on the money is Evan. Good to see you, Evan. So what's your thinking now? Are we going up before we go down?
Look, Peter, certainly seems to be the case. As I said, you've put out the fact that, 1 in 3 economists think that there's obviously going to be a rate rise in August. The market's actually stronger than that. They have a 67% chance that a rate rise will happen in August. It does therefore mean that the only thing to now worry about is happening on the 31st of July. That is second quarter CPI data, which has a lot more information. It'll also show very clearly the breakdown in services PMI. And why that matters, services at the moment, particularly market services, are being distorted by things like insurance, by things like rent. They are absolutely above and beyond normal trend. So we want to see how they've mitigated. The other thing to remember is that this time last year, there was also distortions going on. The Victorian energy rebate was rolling out, and that therefore has actually seen a fairly reasonable increase in energy prices with yesterday. There are a few other sort of technicals like those numbers as well. Plus, what we're going to get in the next numbers is that there is going to be about a 20% discount in energy as the federal government, Queensland, Western Australia, also come up with their energy. So it could change it. So that's why the chance is high, and I still think there is more of a chance than not that they will raise rates. The pause will come from how they go. We want to see the third quarter before we get there. Now, the credibility question will get there, but overall, the chance to the upside is higher than it was yesterday, no doubt about it.
I think so, Evan. Look, let's bring up a graph now. If we bring up the monthly CPI figures. So if you see it, December there, we're at 3.4%. It's only gone, well, it was flat, but it's only gone up since December. So Jim Chalmers said yesterday, look, on the way down it zigs and zags. So you don't always, it's not a straight line, but you've got tax cuts next week. You've got these energy handouts from the federal government, the Queensland government, etc. That's not going to help, right?
Correct. So if you look at it, there is $19.4 billion in the first 2 years, $23 billion in the next 4. There is $43 billion of overall, stimulus if you include the stage 3 tax cuts in that as well. That's a lot of cash to be flushing around. Rule of thumb, Pete, is that for every quarter notch discount or hike in the cash rate, it represents about $7 billion in terms of that it is. So if you want to work that out, you're talking about somewhere on the lines of between 4 and as much as 6 rate cuts in stimulus. And that's the other way to think about this in terms of what it is. So that is why, the economic world and the economic commentator world is sitting there going, what the government is doing right now is understandable politically. It's not understandable economically because it is clearly going to stoke that number. The other side of that, though, is that the area feeling it the most is the indebted household. So that's 1/3 of the population. And that's why at the moment, the argument from the RBA is that they can't go harder because it's only affecting a small portion of the population.
Good to see you as always, Evan. Appreciate it. We'll talk to you soon.